value and the difference between learning and training. So the story came to me, and it was a very nice, at least for when I was started with my business plan for the office, that one person is actually wanted to do the very nice suit. He goes and go to the very nice showroom, and he saw the price, and he's not able to think that he can afford that thing. So somebody from the salesperson comes and tell him the same, that yes, I think so. I also was in once upon a time like you, and I wanted to do it, and I'm not able to get. So I can give you one solution, saying that here, if you become a salesperson, they give you 50% off, and the other 50% they take over the period from your salary. So this is perfectly fine, and he's applied for the job, got the things, got a good suit. Then he's not able to sell because it's a very premium suit. So who is the owner of that? He sells to all the people. He'll come on Saturday at morning 7 o'clock, because floor is open for the public. It's at 10 o'clock. And he came on Saturday early morning 7, and then he said, "Why nobody is there? Only the person who is the owner, and I am there." He asked the owner what was the reason. So he said, "Most of us always like somebody to pay us and give a training. It should be in office hours. But when you wanted yourself to put an extra time and extra effort, that is what a learning is, and that's what you are coming." So the reason I'm telling you is this, because I'm trying to say you are putting your weekend time to learn something. It's an amazing, and hats off to all of you and pat to your back. So, what is unlocking growth? This is the things last few days I've been trying to speak about quite a lot, doing the how the wealth transitions happening, what is the wealth trends are happening because of business plan. Also, I was been doing quite a lot of things. So I thought, okay, let me try to put it across what comes in our mind. So if we see our parents and everybody, what they must have done it, they normally will do the fixed deposit or a PF or a PPF. They will do post office. My mom was all-time favorite of post office schemes, not because of they do good or something is difficult. Her simplicity is that, okay, I will get my double the money in 7 years. I'll get the double the money in 8 years. So that concept of doubling the money was imprint in her mind, that she's not bothered ki what money I will be getting, is a 6%, 7%, is it XIRR or absolute or whatever. She is not known about anything. But her concept is, if I get today, they have told me 7.8 months, 7 years, 8 months, or 9 months, whatever, 9 years, whatever the amount, it's a doubling. So that's another point I felt most of us, we wanted a simplicity to know how much I will get. It is compounding return or is absolute return or a TRR or WTRR, whatever it is. That complexity was not there. Of course, all of us must have seen parents saying that, okay, you take a gold coins or a jewelry kind of it, so where you can use that part of it. Real estate is all time high, and traditional insurance where you will get a returns around 4 to 6%. Provident funds. So if you notice everything, whatever we are talking about traditional investments, so these are most of the time are fixed returns. Okay. So other than the real estate, most of them are the fixed returns. And that was the concept that, okay, I wanted to know how much I will get, irrespective of whatever happened, how much I will get. And that time, most of us parents, or I don't remember, my dad was in army, by the way. So there was not things much on, okay, what is the post inflation? What is the post taxation? What is my lifestyle index? All those things was not there. The speed of life, the why we are looking. Even if I wanted to do, I can't think of doing. If you think I'm wanted to do an FD, if FD is at 6%, I'm in at 33 or 36% highest bracket, you're eroding the money. So most of these was actually eroding because after post tax, but they were not having those kind of tax and I can say the money also to think about. So their life was very simple. Give me the absolute money, and that absolute is becoming a bigger thing. Now, of course, a lot of time people have come back. So I wanted to tell you one story. Yesterday itself, I met a person, and of course, I didn't able to sleep the night because two things, not only this, another customer prospect made me to think, and that's the best part of my job also, to meet so many people, learn about them and understand. So he said, Rachna, I wanted to have per month, I'm doing retirement planning for him, and he's telling, I wanted to have 20 lakhs per month. And I'm just thinking of what he will do at 20 lakhs, because most of our customers are CXOs, or I'm not talking about like a Mukesh Ambani or something that who wants 20, 30, or maybe 1 crore or whatever. But most of the customers are, I can say, come up from the middle class to upper middle class. They are been in IT, done good, may have money between 10 to 20 crores kind of range. So that's the reason. And most of the people will ask maximum 2 lakhs, 5 lakhs. 5 lakhs is the maximum I have think. I have it customer, but 8 crore I have made a plan. But somebody is asking me 20 lakhs per month was a thought for me. It's a first thought. So I asked him, why you wanted a 20 lakhs? Do you think tomorrow onwards you are getting a 20 lakhs? But he didn't have an answer. So that's another point I always tell people, do have an aspiration that I want this much money, but we need to ask what I will do with that money. Then I asked him, is it you want to start a company, you wanted to help somebody, you wanted to have a charity, you wanted to part of an NGO, you wanted anything, you wanted something, or you want to give to the next generation itself. It can be anything. So because he is telling me his lifestyle is not that much, because I'm just getting all the data. So sometimes it's okay to have an aspiration. There's no doubt about it. If I am able to do aspirational, I can have a more expansion of the company. I can have a more giving to the next generation. I can do. But please be careful to know and should be knowing, if I get this much of money, let us say 20 lakhs a month, what I am going to do. That as has to be come across very clearly. And coincidentally, today was a webinar, so I was just trying to relate it in traditional versus alternative. So what comes under alternatives? So alternatives is like a, now trend is PMS. So we were having a business plan, full day busy, and night I got three, four reference. I spoke with everybody, and then I'm telling Anil, who's of course CEO and founder of Right Horizon, and my husband also. So I'm telling in the night, I don't know, nowadays the money value has gone, or people have got so much surplus. Nobody's speaking less than 5, 10 crore only, and everybody's telling, okay, I want a product. So now the thing is, at least whoever I'm speaking with, I'm not saying that my sample is always a correct sample, but when I'm speaking with, people are saying, okay, I have 5 crore here, 3 crore here, 7 crore here. So the surplus, that way I think so, the people have been saved or compounded, or they have grown over the period, is now I always is now PMS is becoming a new mutual fund kind of it. So mutual fund has taken, you can say, from 98 or 2000. I started mutual fund from 94 onwards, but most of the people started from about 2000. And over the period, if you see now, DII is becoming almost like a bigger than some places, even FII. So, what is DII? Is it domestic investors, institutional investment? The biggest is the mutual fund house, because most of the people are doing an SIPs and becoming so long. So now the next version, and this is another trend also. So I was going through the trends of the what you call wealth side in India and abroad and all. So the trend is how the people are moving from mutual fund to the PMS and AIF, and they wanted a gift city. People are looking, of course, international fund, and even going to the like a multi-country, multi-currency we call those kind of options. So what is in a PMS? So we should know what is PMS, please. PMS is actually portfolio management services. So, if you do PMS, that itself will give it a so much of difference part of it. So now, why PMS, or we call it portfolio management services, is coming so popular. So this popularity has come only last 7, 8 years more. Even though PMS was there for us, maybe say 25 years plus. So PMS, as per SEBI is our regulator. So as per them is person who is HNI. Okay, so high net individual. So high net individual is who, as per them, it's a 1 million. Like you call as at least people should have a 1 crore rupees of net worth plus. So those people who can take a high risk, they can understand the product well, and they wanted a more on the personalized level of investments. They wanted to make a things which is more linked to their risk, they're more linked to their thoughts and other things. Of course, in a PMS we do have a two levels. It's called discretionary and non-discretionary. Means once like in a mutual fund, if you are invested, you fund manager doesn't call you, okay, can I buy this fund or not fund, like that. It's the same thing, it's like a non-discretionary. So it's a discretionary is fund manager, we have chose the fund, we have okay with the PMS or a mutual fund, the fund manager will take care of it without anything. He has a power of attorney to buy, sell, and it is a discretionary. So mutual funds are discretionary. PMS 90% also discretionary. But some of the people I know, we also have, does not have 50 crore or 1 crore. So if you have a 50 crores and 100 crores, so you can't have your own, I can say, fund house. But you says, I want you to invest these funds, but you take a prior approval from. Okay. So those are the things which is coming more on a tailor-based portfolios, their risk, their goal. They will say that, okay, I want this sector to be linked to this. I wanted to be making sure that this portfolio is linked to particular, I can say even the fund house also. So they makes the do and don'ts, the rules engines, and make personalized. That is for a non-discretionary. Otherwise, I always tell people PMS is same as mutual fund. The difference is PMS starts with 50 lakhs and mutual fund start with 500 bucks. That's the only zeros difference. There is nothing else difference. The other difference is comes across more on a better transparency. I have few customers coming to me and saying that, can you tell me how this mutual funds fund management charges is calculated? So I explained the concept, but none of us will know because the all the charges are deducted and then NAV has been declared in mutual fund. But in a PMS, we can show every day, it's called daily NAV. So, sorry, daily AUM of yours. AUM is asset under management on the money of yours. How much you have every day, and how you take the averaging and you multiply, and that's the money has been deducted. So, the better transparency is becoming a one of the reason. At least I know bigger people above 10 crores minimum whom I've heard of it. This says I wanted to know how the charges are being calculated. Not that it is good, bad, ugly, but I wanted to know those, and that's why they have moved. Of course, it is little bit higher returns because I was just debating with Anil before coming. It is too much diversification, or it is sometimes is the rules because SEBI has been now, of course, trying to do day in and day out on a PMS lot of regulation. But when mutual fund is being settled, everything's everybody, most of the people knows. Now I don't have to go and explain somebody what is mutual fund. They will just say that, okay, Rachna, you do mutual fund, you do one time, you do this. So they only come and tell me like that. Previously, I have to tell what is KYC, what is mutual fund, what is SIP, what is STP, like that. So same thing now happening in a PMS perspective. But yes, some rules I'm giving example is in a mutual funds, even in a day, coincidentally 3 days back only, I was just talking the US market has gone to 7% because of Mahavir Jayanti. Everybody was expecting market was closed. Next day it went, US market went down. So net of it, our market was up around 2.5%. And in 2.5% from morning to evening, it was a variation of 1%. So if you are in a mutual fund, you will take it's called end of a day NAVs. But if you have purchased in a PMS, let us say 12 a.m. Or 12 noon or 11 a.m. So you will take a price what was at 11. It's not the end of a day. Okay. So you have a better returns coming. Then second better returns most of the time comes is because of a size. Mutual funds schemes are around 50,000 crores. So it can be 1 lakh crores. So sometimes you just go and do the, maybe I don't know where you have been doing, but most of the people use like a Morningstar, values research, or money control, and take one scheme. Let us say any large cap, anything. You will realize, or a mid cap or small cap, one scheme have minimum nowadays 80 stocks to 130, 140 stocks, because a percentage of the money they wanted to buy and sell is not available in the volume. So it is becoming a too much direct stocks come of it, and in a PMS, it's normally around 25 to 30 stocks. Flexibility and control. Lot of time the you have a discretionary, non-discretionary, you can have advisory, you can do quite a lot of things. You have the fees which is performance link. Mutual fund is already has been approached, letter is gone, not yet come. So those performance links is there. And tax efficiency is, according to me, the almost the same part of it. It works, but mutual fund is, you can say, I call deferred tax versus current tax. So if you buy today and when you sell the mutual fund, only you get it. Here, because your demat is in your name, so when you buy and sell, you have to pay on the same year. So who is typically invest in PMS? So minimum, of course, as per the SEBI itself, is 50 lakhs or more. People most of the time is entrepreneur and a business owners. They do it. Or like at least for me, I have seen most of the customers whom I'm been speaking, being worked on Infi and Wipro, both of them have a very good RSUs, ESOPs and other things. So they says, okay, Rachna, I'm giving you the ESOPs, you manage the best. So high executive with a good ESOPs and ELSPP, RSU, whatever you can think of, have the portfolios, they invest in PMS. Another new things which is coming very high for me is people in US NRIs or generic NRIs. So generic NRIs wanted to take more returns from Indian market. So they are being normally taking a lot of PMS part of it. So, and the last but not the least, I have seen it's a trend. So I have one customer, he started with PMS and he has given at least 18 reference, and all 18 people, irrespective of I said you, why don't we do the first financial planning or a wealth management? No, no, my friend has taken a PMS. You just give me the PMS only. So that kind of, you can say, friend circle or a FOMO or whatever is a trend, it is another league of saying that. So I was jokingly asking another person, why you all friend circle is not even trying to do, because everybody's salaries are different, risk is different, families are different, so what is good for your friend may not be good for you. So this is no. See, when we are meeting and speaking, is so many times is the same topic. So if we go down, we all will go down together, and if we go up, we'll go all go together up. So that's another thing I've been learning when I speak. But I personally feel that may not be the right way. But there are so many times I've seen the people together, friends are together as a trend. I think so. PMS has been going also very good. So, what are the segments normally people go slowly, slowly? So, most of the retail customers will try to see if I can take a tax options or mutual fund, SIP, or a goal based. After some times, when they're slowly becoming the HNI side, they started doing diversified, yeah, risk adjusted return customization through the PMS. And the next level for a PMS always is AIF. So that is another point which is coming across, alternative investment plan, which is another things which is coming up very, very well on the things. But the AIFs are actually 1 CR minimum to take care of it. So this thing will tell you how the alternative income funds are becoming more in a demand or a trend, and people are making more money because 2 to 3% higher return on a CAGR, or you can say year on year returns kind of it. Most of the PMS house gives. So if you see in 2016, PMS was only 22% and AIF is 4.5. And if I see in 2024, the mutual fund from 68% it is becoming 59, 24, and AIF is becoming 16%. So indirectly, if you see the alternative funds have started growing over the period quite high in the demand. And my perspectives, that's a very clear with me. What I do in my personal portfolio, I tell others. So in my personal portfolio, I always says you'd first take it as a debt and equity ratio, which will tell you how much risk you should take it. Then in the equity, I divide as on today, 50% goes to PMS and 50% goes to mutual fund through SIPs. PMS is a complete overall portfolio that is a same thing like a how you decide for in a mutual funds and others. That is the same way here also you will have the objective. It's a mid cap, small cap, large cap kind of it. You will have the fees. Fees is very transparent because the data has told. But I can tell you that's a reverse also it happened. Sometimes transparency is also not so good. So another person came back to me and say that म्यूचुअल फंड नेवर टेक अ मनी ओनली एंड आई सेड व्हाई दे आर मैं चाचा लग रहा है कि अब फ्री में करेगा सो आई सेड नो 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 आई हैव माय पर्सन हैज टोल्ड देयर इज नो मनी एंड ऑल सो most of the time it's like a this is no disclaimer you should know the risk actually they may not say but nowadays of course a lot of people are saying through the google if you do google you will know nav is being declared after deduction of the fees okay so they have told, but we have told, yes, we understood and we have signed it all the forms. We didn't read it. And when somebody told them, they said, no, 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 they have misguided me and not told it across. So sometimes I have noticed as a human behavior, we always like to blame others than what we do it. And last few days, I have been reading quite a lot on the happiness index, and India is 123. So 123 out of 146. So you can think of. So one of the reason we always say is that we try to blame others so that is the one thing, not only investment, I'm saying because I'm talking about Indian level things is not a financial levels. How the happiness index we can try to do it is another aspect by itself, but I'm saying the transparency is good. Sometimes we are not ready to accept. So I'll give you another example is on a traditional insurance. A lot of people does traditional insurance where you get a returns around 6 to 6.5% post tax. It's still very good, no doubt about it but normal traditional insurance commission comes between 20 to 25 on an average. But in a ULIP, they will say this is your charges, this is the commission, this is what, and which comes around 15 to 18%. And they will, so many people, customer prospect has come to me, this person Rachna has sold it and see that is the charges they didn't tell. And I said the other traditional what he has sold the insurance is he actually got a much more brokerage, but it is not written in the your statement and you are okay with it. So sometimes we should know what I am looking. Am I looking transparency or I'm looking to blame somebody else? So be clear on what transparency level I am looking for. Flexibility, no doubt about it. It is having a performance, it is having the flexibility on your taking a portfolio, customizations it is taking. But you have to always seize, make whom you're following as a fund manager who is a theme about it. So what like if for right horizon we say we always focus on risk adjusted returns or a bagger kind. So if takes 3 years, 5 years. So if you are not in that appetite, try not to go for it. Not only right horizon, anywhere, whoever you do, not see the past returns because past returns are like you're driving a car with a rear mirror and I'm sure whoever is here nobody will drive. I have been driving more than 30 years. I use my rear mirror only somebody is honking me or I have to take over, that's it. So same thing when you are sitting and you are taking a scheme, the fund manager is your driving seat. So how he is going to drive it is going to impact what it's a mutual fund or any PMS. That's the way you should look at. So how consistently there is a myth that okay PMS is not consistent and all this stuff. So that's another option I have seen. Most of the people will say PMS also like a every month or every year, every 2 months they will say okay how PMS is doing. There is no doubt you should have an access to see that what is happening. But whenever you are looking at skiing, and that's what I was talking about traditional, you ask go ask your parents today also How many times they must have gone and checked that how much FD is going to give, my policy bond is correct or not, LIC ka branch hai ki nahi hai. Nobody is going to look at those. I have given after 5 years, they will write it in a one register when the money will come and I will reinvest. So they allow money to grow. So I always tell Anil, the reason is people are not able to because they become so impatient. Everything is becoming that 10 minutes delivery only. कि वो डंजो कर दो ब्लिंकिट कर दो मेरा स्विगी में आया कि नहीं 1,000 rupees food also we will see 5 times कि it is picked or not where it is and how long and we have started in our mind so much of quick things it is impacting of course it is on a I'm saying as a mental health is a different level but I'm saying even that we are trying to do the same thing in financials so when you are having a portfolio, start thinking your portfolio is going to be like a mango tree. So where you will have a put a seed and every time you are giving a manure and a water and a sunlight. After 10, 15 years, it's become so big and started giving you the best fruit every year. And that is going to give you the value of compounding and the things. So look long. So somebody came and asked me, he was an entrepreneur and I was coaching that person. And he said, Rachna, I wanted to know if your customer is cribbing or something, what you will do. So it's not that they don't crib. So you have to explain and teach them. But I said, we are very good in telling people not to become our customer, then becoming a customer. Because if my expectation setting is not there, I don't take a customer. And I said, I'm very happy to become your friend and help you. There are 1,000 people in a market who can give you more returns. And then you cry. So in my working group, they will keep teasing. Yeah, I can give you more returns. Only capital, I will not give it. So you all have to realize it. Is it true or not true? Forget it, scamming part of it. People are saying, okay, I want only for 2 years or 3 years. We don't take any customers if customer says I want less than 5 years. If somebody is telling me I want 12 to 15% say plus equity returns, no data. It's not I am saying. You please find the data of 10 years, 20 years, 30 years. What is an average returns we are getting? Depending on bull and bear, it is coming between 12 to 14.5 or 15%. Then why you are expecting somebody else? You take a Warren Buffett portfolio, it is 19.6%. You take Junior Valley, it's 21%. I'm saying try to see what is realistic. You can't expect somebody, okay, is somebody is giving 30%, I told and I did it. Yeah, you must have got 1 year 30, 1 year even 154 we have given. But you have to realize if I have given you somebody as 100, 154, 54, the next it will be minus 30, minus 50 also. So that realization of a long term has to be taken with the data, not somebody speaking about. Good thing for all of us is now you have AI, you have a chat GPT or anything. I keep playing around with ChatGPT, but I take only pinch of salt with it, not more than 2% till I validate because I got so many times backup with the data was wrong. So how the growth rate India versus globals are been happening, that is a way you can say Indian is going to do good. Forget it, the small part of the tariff now as of today, but it's going to do a long term very good and everybody's eyes are in an Indian market on an overall level. The next part, why people suddenly moving from traditional, it's not that we should not do traditional or something, because nowadays the surplus incomes are also coming very high. And that most of the time the trend is becoming so most of the customer for us came again recently ki Rachna, I am selling my two houses and that amount you put it in PMS. And I said, what happened? My both the kids are gone abroad and they are studying there and they're planning to settle there. So they don't have a time to come and sell and do the rentals and other things. So it is always better to have a liquidity and go. So there is another trend which is coming, moving from traditional is because the next generation may not be able to sustain or they have started realizing because I have taken so much of real estate, if I sell real estate it may give you 3 to 4 crore but I am getting only 30 or 50,000 rupees a rental and then to lot of effort. So that's another thing is making people to do one time business exit is another place where people have started moving quite a good on the surplus side money. No doubt about it. India in a fast lane, we expecting should be in top three in GDP as we go in our next 5 years. So there is nothing I can do it. I'm sure all of you must be getting this data not only from me, from anywhere that how the Indian is going to have a trillion from 4 to 8. That is a things always we can says how it's going to do, and there is no second doubt amongst any one of us to see how it has been growing. And I can tell you, I have a habit of every week, I write the article, what I learned from customer or what I felt and observed. So last week I have written, I have gone abroad, and every time I have, on an average, I do 4 international travel. And every time I have gone anywhere, it's not only Asian countries, in any countries, you feel how I can say you're like a top of the world that, oh my God, that India is so progressive and we speak so bad about it. And now your respect to India at least keeps going higher and higher, even though I'm a diehard Indian, to feel that he, so it can be US, it can be UK. I'm trying to tell you the way we have grown. So I'll give you a simple example. I was in a US and I was telling my brother, okay, food is not there, let us go and order it. Then his answer, it is not in India that you will get a Swiggy or Dunzo in 2 minutes or 2 hours. It takes 1.5 hours. We can go ourselves, pick ourselves, and come is much faster and all. So we got so used to of maybe UPI, or you can say about Dunzos or 10 minutes kind of it. And even in the Singapore, daughter has been doing there. Opening of a bank account here, I always feel you ask, people comes here and we open in one day. There it took 30 days, and I was telling, my God, what is happening kind of it. So when you see, meet, when you go for a vacation is totally different. When you go there and stay there for 20 days, 30 days, you realize it. That the life of ours is thousand times, of course, better. And that's where I can see in day to day that India is going to grow much, much higher. Potential superior growth on the market, there's no doubt about it, how the things are being doing the market cap wise. To just give you the again overall levels, how people are being defined as per the SEBI. Most of the time, top 100 ranking is come under large cap. 100 to 250 it is come as mid cap, and 250 to 500 it comes as a small cap. So these are the companies when you are trying to say that I'm in a large cap, multi cap. Of course, multi cap have all the three. Mid cap. These are the things which people have been doing. So last few times we were saying that how the mid cap has done. So benchmarks also sometimes they reject, means some company comes out from the benchmark and they go in. So that is also, so it's not necessary always to look the benchmark, because benchmarks also keeps changing across. What is the potential on a PMS? Of course, it has been doing quite good. So I always tell in your mind, think about 2 to 3% difference in the returns in the long term. It is going to do very well in the return perspective. Risk is a similar one. Divide, diversify both part of it. Then how, as a industry is growing, that is what it is coming across. But I can tell you, as the things are being changing over the period, people have started moving more on a PMS, more on a transparency level than anything else. When we are talking about family office business class people who are above 50 crore, 100 crore, nobody goes on a mutual funds nowadays. Need an alternative, there is no doubt about it. That's one things people have been asking without. If nowadays I feel everybody have the good exposure they can do and buy themselves on a mutual funds, until unless they are looking an advice. PMS is becoming like a one product, just like how you say, no, I'm going to buy the new mutual phone or maybe a new laptop. Like that, people have been saying, okay, I just wanted to go and buy one, I can say that fund, and that's the way the PMS and AIF has been driving now. This is the new learning I have done last 1 year back, that people now, all these things, what I'm saying is what I've read and what I hear and from my customers. So this is now another things people says, and I also believe that wherever you invest, try to find the reasoning of that money. A lot of time people have says, okay, my kid is born and this money I will use for marriage, is used for the education, this is for retirement. This is what we should do it, and that will become the core forward, that okay, how we are going across. You should look any product, what is the risk they are managing, what is the fees they are going to do, how they track the performance, and what are the different options they are going to give it to you. What are the channels for wealth creations perspective in Indian market? You can do direct equity. There is no doubt you can start with a demat with a 10,000 rupees or 500 rupees or whatever one stock itself you can buy. Mutual funds require traditional investment, which is talks about 500. PMS is portfolio management services, which is 50 lakhs, and AIF is 1 crore. Anyway, that proposal to SEBI has gone for mutual fund to have, if we can have the performance link fees. And for a PMS, they wanted to move to 1 crore and AIF to 2 crores. It's not yet accepted, but this is what the proposal has given. Why PMS, as I have already explained you quite a lot in this, approaches are almost the similar. You can take a leverage only in AIF. Fee structure is 2.5 depending on the scheme most of the time, unless you are in a direct funds. Fixed fees, variable fees, and profit sharing is a part of in a PMS and AIF. Regulatory is all three are SEBI. Capability of customization is mutual fund is none, PMS is high, and AIF is low. Skin in the game is a medium because they says that the whatever is a profitability or incentive should go to the fund managers, and that's why they make it that part of it. In PMS, there is not much on the skin of the game, but I have noticed most of us who are the PMS, I can say companies, their owners or the top CXOs will have their own their PMS also. Investment option, direct and regular, both are there. And how much is AUM is around 60,000, 64 lakhs crores, 35 and 11. These are the data which is given by the PMS Bazaar, and I have considering the same. In summary, whenever you are doing, you have to understand what is the your profile, client's profile. So how you can see is it in a growing phase, or like I'll give you example. Somebody says I just sold the business exit is there. I have sold the real estate. I have done it. My this is very common for us sales retirement. I have retired just now. I have got my PF, PPF. There's 5, 6, 7 crore, keep it across and just give me the monthly till 85. So that's a very, I can say, the highest level people are using PMS, or we use that because very few PMS have the hybrid fund or the debt funds, which is started recently. So, which will give you a regular payout. You should know do and don'ts. Everything doesn't fits for everybody. It's maybe good for your friend but may not be. So please try to understand. Don't look for minimum less than 3 years. Please, there is no guaranteed. If somebody is telling also it's guaranteed, first of all, as per SEBI, we are not supposed to tell or write or something. We can say as per past performance. But still, if somebody is saying, try to keep it in your expectation as around 12 to 14, and that's what I can think of. If it is mid and small, not more than 16 to 17. Long term performance, it will always be very good. It has been beating the benchmarks. So please try to understand, look for a long term on the overall. Otherwise, it's better, be simpler, being good to continue with the traditional with the mutual funds. I'll just skip this part of it and I'll just take the what is the key things, what how you wanted to choose PMS, and then I will happy to have the questions. Try to see what is their investment philosophy, very, very important. Ensure that how the risk and rewards are aligned to your financial goals. As I told you, this money you are using for what, you should be very clear. Holistic evaluation you should do for PMS performance analysis, because it may happen that we have taken a stock and that stock is good, but in this time it's not doing good. See the track record, not like in this PMS houses come next last 3 years or 4 years. So means it is always on the bull run. How to find the where, and if it is not, how that fund manager has taken in the past on the bull and bear both. That's a very, very how they are being taking care of a regulatory compliance. what is the role, and the things like you should know what is custody, what is fund accounting, how you are doing, compare and then choose it across. There is nothing, I always tell people, if you are not convinced, don't invest. When you get convinced yourself, then you should start investing in it, and that will give it. So I can tell you, I have been doing from 94, of course, SIPs and all. I never saw the and you will surprise, that's a lot of people come and ask us in our office, nobody will check the market. Okay, nobody screens is having a market. So market is done by the PMS research team, fund manager and others, but none of us who are in a sales or in a analyst team may not have it. Because our thought, I always says, what is my goal is to make people achieve their financial goals. So my work will be how to do realign, how to do asset allocation, how to do diversification, make sure the investments are happening on time, taking care of those. That is what our core subject and what we do it. So same thing, you should also know when you're making money, where you wanted to invest. So my limited knowledge on client experiencing and managing a client is, first 10 crore, I feel it is required for your goals, your comfort, your lifestyle, and basic things. Then you can start thinking across, okay, I want charity, I want a society based, or I wanted to do a VC fund. And then you start looking, okay, I wanted to go for angel funds and other things. When you start taking risk, then you can start thinking, okay, I want a currency based, I want an international based. That is what I have noticed. Most of the time, we should be very clear which goal first I'm doing and how I'm going to take care of those part of it. So with this, I actually stop my part of presentation.